Creamer Media in Johannesburg, this is the Real Economy Report. In our top stories this week, we look at South Africa's opportunity to boost its manganese business with the help of the world's biggest mining company. The airports company reports on its readiness for the 2010 World Cup. And we look at South African gold major Harmony, which has declared its first dividend in 5 years. This week, Mining Weekly captures the views of the topmost BHP Billiton executives on the need for South Africa to develop a bigger and better railway system to the coast for manganese exports. Martin Creamer has the story.
BHP Billiton's South African CEO, Marius Kloppers, and the company's manganese head, Peter Bevan, both put the case for a logistics partnership with Transnet in order to lower the cost of manganese exports from the Northern Cape.
What we do know is that there are very significant manganese resources in the Kalahari, and we've basically got a logistical constraint.
There is more demand than capacity at this point in time, so that is really the fundamental business case. In addition to that, we've got to find a lower cost option.
But if we want to grow structurally our manganese business off a very, very good resource base, not only ours but the country's, I mean, it is important that we in due course find another export route with more capacity, and we look forward to continuing to work with all of the people, other producers, service providers, and so on, towards making that a reality.
We are back into selling some product now. The Chinese are starting to restock. In fact, they're probably towards the end of their restocking in the manganese industry there. And we're starting to see some blast furnaces turn back on in Europe and in the US, and so that market's starting to come back to life a little bit. Prices have started. If you look at the spot prices, which are published, you'll see that all prices have started to tick back up again, as have alloy prices. So
that new investment drives new opportunities for empowerment, because you're making a new investment. You need new partners, new opportunity to socially develop, new opportunities to hire people.
South Africa should take up BHP Billiton's investment offer in order to pave the way for greater manganese exports at lower cost.
In less than 300 days, South Africa will be hosting the 2010 FIFA World Cup. Dennis Ndaba spoke to Airports Company South Africa MD Monglaghlagla about its 2010 preparations.
AXA has revised its 2010 World Cup related infrastructure expenditure down to 17.8 billion from 19 billion owing to the prevailing economic squeeze. However, AXA is adamant that it will complete essential 2010 related project for the efficient facilitation of the Soccer World Cup, which is a strategic investment for the company and the country.
Our plans are on budget within the current year. We are about 70% to 73% underway. Because we are transforming a number of our airports. Some of them are more towards completion, like OR Tambo. By December, a lot of it will be done. Cape Town, most of it will be done by December, with the last part to be completed by February, March. And then the one that everybody knows that it's the biggest construction site is La Messi. We are about 60% on the way. We should be completing it also around February, but because of the testing of the various elements that are more than the other airports, we will only say that we are completing it around May, because at that time we decommissioned one and commissioned a new one. One of the things that happens to you in this climate is that when you do your plans, you also have a guarantee in a business like ours that you are going to be generating good revenues, so that even if you borrowed, your cash flow stream is quite robust. With a decline of an average of 7.7%, it means that the revenue base is lower. The amount of money you generate out of that base is much lower than before, or lower than what you've expected. On that basis, we've had to defer to later years a small amount of projects amounting to 5 billion between 2008 and 2010.
Martin Creamer spoke to Harmony Gold CEO Graham Briggs, who managed to turn a 4 billion rand deficit into 1.6 billion rand in cash.
Perhaps the biggest threat to Harmony's growth plan of 2.2 million ounces by 2012 is the strong rand.
To get from sort of 1.5 million to 2.2 is quite ambitious. We continue to spend capital, and so Doornkop, Phakisa, those sort of assets, Hidden Valley, Elandsrand, very important in our growth profile. And they start to deliver. Really coming into this year, they're starting to deliver. They're just starting to ramp up, starting to increase. So that's quite exciting. If you've got cash in hand, it means your assets are unencumbered. That means if something comes up and you need your assets to support a deal or something happening, you can actually do it. So there's more to just having cash in the bank. It actually means my assets, the company's assets, are unencumbered.
Buying the liquidated Pamodzi on the cheap is a bonus.
It's got lots of synergy and growth potential, so we can get synergy with management and different shafts and different parts of the operation. So that's quite important. We don't have to add more management to be able to manage that. Obviously there'll be the interim and the building up, and we'll focus a lot on that. But we surround those assets, so it makes good logic sense.
And now for a sneak preview of this week's Engineering News magazine. Read our cover story on the embattled South African property market, where signs of green shoots are starting to emerge. We report that the environmental study into a 1.5 billion rand Western Cape wind farm project will start next month. And state-owned defence industrial group Denel aims to return to profitability by 2012. And in Mining Weekly this week, our cover story looks at the role that carbon capture and storage plays in transforming coal into a cleaner technology. Simmer and Jack Mines warns that it may have to close more shafts to stop a cash bleed. And diversified miner Exaro says a new rail link between the Waterberg and Mpumalanga is needed to ensure South Africa's energy security. That's Creamer Media's Real Economy Report. Join us again next week for more news and insight into South Africa's real economy.
Creamer Media's Engineering News has delivered unmatched insight into the real economy. For breaking news, visit engineeringnews.co.za. The Engineering News, not just for engineers.